following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the January 28th. Wonderful Wednesday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes, who knows for a fact that each of us need to be pioneers of our future versus prisoners of our past. Hope everyone out there had a terrific Tuesday. Let's make sure that you and I, that we do everything humanly possible to have a wonderful Wednesday. Of course, the easiest way to do that is to always remember that life happens for us, not to us. When you and I, we make that one little shift in words from 2 to 4, really, right? A 2x4. Just hit me upside the head out there. It makes all the difference in the world, because what it really means is that you and I, we can find the gift in every set of circumstances that the universe is going to throw at us. And the universe, it's always throwing circumstance at us. In fact, there's nothing that emulates that more than the markets that we trade, especially if we take a look at the intraday data that is going on. I am absolutely grateful for your presence here this morning. Thanks for beginning your day here with us at TFNN. We greatly appreciate it. Of course, we're here to serve you. Feel free to call in at 877-927-6648. Internationally, you can reach out as well at 727-445-1044. This is Wonderful Wednesday, of course, none other than Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, Dow Futures up 18 points, trading out at 17,396. S&P Futures up 6. They're trading at 2,036. NASDAQ up 43 points right now, up 1%. Trading out at 42.21. Of course, the big horse in the pulling the market, or pulling at least the NASDAQ higher, is going to be Apple. So we'll see how that trades today. We had certainly Microsoft, Procter & Gamble. We had the big boys pulling the markets down yesterday. We'll see what Apple can do. How about that, Apple? How about the mere fact that Apple today can, I heard something just in the background a couple hours ago, that Apple has enough cash on hand to actually buy out IBM's, all of IBM stock, just with the cash they've got on hand. How about that? How about that? Look, I remember the day I began selling Apple and IBM Compaq computers back in 1983. And so I remember, at that stage of the game, IBM was the Goliath and Apple was the small little guy out there. My, how things shift. So hopefully Steve Jobs is up early this morning and is celebrating upstairs. I don't recall him being much of a golfer up there, but maybe he's playing a game of golf. Maybe he's developing some new products, wherever it is that he's at. In any event, let's go take a look at these markets. Right now, we've got gold back about $6. Trade on at $12.86. We've got silver down 7 pennies, trading at $18 even. Stephen, light sweet crude getting hammered this morning, down $1.10, trading out at $45.12. Natural gas back about 9 pennies at $2.89 or so. Let's take a quick peek here across the globe. Let's look at what's going on. The U.S., you can absolutely say that we didn't hand the market off too well. So how was it that Asia responded last night? Asia kind of said, I don't really care what you guys have going. I don't care about that Microsoft out there. I don't care that Microsoft was down, 9%, plus 9% with volume. You would have thought that the way that we handed the ball off to Asia last night, Asia, I'm referring to the Nikkei, the Hang Seng, the Shanghai. If we take a look at the Nikkei, it actually closed higher by 27 points last night. Now, that's not much in the case of the Nikkei, but nonetheless, it did not fall apart at all. If we take a look at the Hang Seng, she was up 54 points, didn't make a new high. Meaning from the prior session, had an inside day, but no falling apart there. The Shanghai pulling back just a bit, but that has been strong like bull out here. The Shanghai is headed for the 3602 level. It's been up as high as, on January 23rd, got up to 3570. It's going to be at 3602. That is a potential significant resistance area, but if it breaks through that, boy, that bodes very well for the Shanghai market. Now, how about over in Europe? Europe, we had the DAX closed down yesterday, but the DAX almost really more of an inside-ish type bar. It did tick a bit higher from the trading session early on January 26th, but that's rejected lows this morning, so it's not exactly like that's fallen off of any kind of cliff. She's still at its highs. What we do know about the DAX, it's an A to B equals CD to the upside. It has not completed even the first price objective, and the DAX has got more than one price objective on its A to B equals CD pattern. The first one is at 10,957. The reality is I can easily make the case 11,429 is more likely where the DAX is headed to at a minimum. So nothing here inside the DAX chart that suggests it wants to pull back. If we take a look at the FTSE, so if anything's going to be pulling the markets down, it's going to have to be the good old US of A. And I don't think the good old US of A wants to do that. Even if we take a look at the FTSE out here, the FTSE has completed the one-to-one A to B equals CD, but it wants to get up to 69.43, and it wants to get up that 69.05 level. 69.05, that's where it's going to challenge basically its consolidation highs, very much like the Russell 2000. So we've got two indices here, as you know, that will continue to follow today. So far, a flat session inside of the FTSE, up just slightly, more of a high wave type candle out here. Just means that the market has lost its way just a bit. But as we take a look at market's response to what the U.S. did here yesterday, pretty muted. Absolutely muted out here. So then let's go take a look at our futures. In fact, it was after the bell, not after the bell, but after at 4:30 when IBM came out with numbers. Boy, did that jolt the markets higher. In fact, if we go take a look at the Dow futures, let's pull this up here, just to give you some perspective, because many of you maybe were sleeping. And if we take a look at the Dow, we had the Dow actually, futures were up at the price point to 17,488. It's another 100 points, really 90 points higher than where we're trading at right now. So, that's where it was about 11:15 or so. 11:15, 11:30, somewhere right around there. And if we take a look at the Dow, if we take a look, the Dow is the weak link out here. If we take a look at the Dow, there's no damage. There has been absolutely no damage up. We've been, well, let's do it like this. Let's just actually forget about, let's put the monthly chart up here. Let's take a monthly chart here. Of course, it's not going to have any data because I got the current contract. What the heck am I thinking? Well, I know what I'm thinking. Let's just switch over and take a look at the main view. Let's take a look at the Dow itself. So as we go switch over to the Dow, 17,387 was its close. But if we just switch this over, let's just switch this to a monthly chart out here. Are you kidding me? So let's not get our skirts up in a tizzy here. We know about the Dow. Now, this shows the A to B equals CD pattern. This is the monthly chart that is underway right now. That says that the next price move inside of the Dow, 18,553. So I'm sorry, I do not buy into any other reading of what's going on inside of the markets, even with the big down day yesterday inside of the Dow, of anything more than these markets, all these markets, worldwide markets. You can blame it on QE. You can talk about whatever it is that you want. These markets want to move higher. I do not see any evidence here that supports that these markets over the long haul. So let's make sure that we get the perspectives in place out here, that over the long haul, we've got a monthly chart up on our screen, that the Dow wants to do anything other than move higher. And there was nothing that could have given us a bigger signal yesterday than really what was going on with regard to the New York Stock Exchange. So for those of you that say, hey, I'd really like to know what the overall market is doing out here, well, the New York Stock Exchange, without a doubt. Well, let's actually, let me just switch back here. Let's do it this way. Let's do the same type of thing. Let's pull up the New York Stock Exchange. So let's do that. Let's put that on a monthly chart out here just to kind of keep things in mental perspective. That's what you've got to do. You've got to keep things in perspective at all times out here. If we take a look at a monthly chart here, let's put the month, there we go. Take a look at the New York Stock Exchange. Just take a look at that beautiful rising price channel that it is in. It's got much more room to run to the highs. We know about the New York Stock Exchange. It's really simple. It got above that 2007 high, just like the FTSE is trying to do. The FTSE is kind of the laggard out here. It has not done that, but it's going to. And as we take a look at the New York Stock Exchange, that high of 10,387.17, that's been tested. Once price got above it, it's been rejected. It was rejected last month. It was rejected back in October as well. And if we take a look at the activity that's going on just this month inside of the New York Stock Exchange, really no big deal out there. So it too wants to power higher. The bottom is in for the year, perhaps for the year out there. We'll just take things one step at a time, one day at a time. Let's go out to Concord, New Hampshire, to Don. Don, thanks for calling. Thanks for holding. How you doing this morning?
Hey, Steve. Could you look at Microsoft?
I can. Tell me what you're doing, how it can help you.
I'd like to own it.
You would. Boy, yesterday that was an ugly session, down 9%, gapping down into the swing point here from October 15th. And you'd like to own it. Is that because you're looking to own it from a longer-term perspective in your portfolio, or what's your time horizon?
I would say we're talking longer term.
Longer term. You know what you've got to do. So longer term out here now, what I'm going to do is just at least switch over to a monthly chart here and take a look at Microsoft. So let's see what kind of damage was really done yesterday. And we're going to take a look at just simply a trend line. By taking a look at the monthly chart, there's a couple of trends. But the one that I'm going to use is the one that would be a little bit more current for you. So let's see where this is at. We'll use a green line out here. And that's just simply coming off of the lows back in January of 2013. So I'm just curious, what's the trend? Did yesterday's price damage do anything substantial to destroy that trend? And the answer is it hasn't. Now, with Microsoft barreling down the way that it did, if you're asking me where is it that is probably the best place for you to take a look at a long-term position, first you've got to see how it trades over the course of the next several days. But I would say it would be the bottom of that downtrend. And that's going to be somewhere around the 39.75-ish, 39.66-ish type level out here. And that's what I would be looking at. Very much similar to when we were taking a look at, or I was taking a look at Amazon, and I was taking a look at the very long-term trend in Amazon. And what held Amazon, even when it had gapped down, was that longer-term trend. The damage that was done yesterday in Microsoft, substantial, significant, no question. And what we don't know, even though it didn't take out that swing point on the daily basis out here, I still believe that longer-term trend may be where it is that you would want to go ahead and try to target an entry. And it's going to be somewhere, in, in that 40 area. And the nice thing about that is if Microsoft does come down and test that, is that, Don, if it starts to break through that level, there's something more serious going on inside of Microsoft. And it would say, hey, you'd want to take a look, and maybe something else. Now, what I'll also do is I'll just take a look at an expansion of swing points just to see where that might come out to. And the expansion of swing points is 39.94. So right now, not knowing how this is going to trade here for the next couple of days, and I do believe the market has made a significant bottom. The question is, has Microsoft made a significant bottom? So the answer to your question, 39.94 is the price point that I would target at the moment with today's information. Does that help? Does that help you, or what are you looking at that maybe that I should look at too?
I thank you very much.
Oh, okay. All right. That's great. So that was Don in Concord, New Hampshire. And, if we take a look again at Microsoft, big, huge volume yesterday. Didn't break through the swing point. Did test the swing point out there. But it says it should at least. Well, did it test it? Let me see. The low was 42.10. What did it get to at that swing point? It got to 42.10. So it tested an even Steven out there, but big volume. So we'll see how that actually trades today. 877-927-6648. We get back. We'll continue looking at the markets. We'll go look at the intraday. We'll go take a look at two different patterns. We'll look at the NQ. We got to look at the NQ because today is probably all about Apple. And we'll see what Apple can do with these markets out here. We'll be right back, folks.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of TigerTV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of TigerTV, then visit TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's go dive down into the NASDAQ. Let's take a look at a couple of different time frames out here. So right now you got the NQ futures trading out at 42.21, and they probably paint the direction for what the market is going to do. The problem is, as we take a look at, let's look at a 30-minute chart out here. I think the 30-minute chart may be the best for us to try to identify what might happen out here. So let's take a look at information that we do know. Let me turn a couple of things off. Let's just clean up the chart here just a tad. Let's turn off volume. Let's turn off the task. So we're just going to clean this chart. Let's get the moving averages, because we're going to leave that A to B equals CD tool on, though. So as we take a look at the NASDAQ future, we can see that the low that was made, that was between the 10:30, 11 o'clock session yesterday morning. That's down at the 41.4275 level. Now, that's an important area for us to use as an anchor point. And we're going to use that by just simply, as we take a look at this chart here, we can see that there was a high that was put in back on January 23rd between the 1:30 and 2 o'clock session. That was out at 42.86. So we're going to go from that high, that anchor point, down to the low anchor point that came in here yesterday between 10:30 and 11 o'clock in the morning. What we can see here, so what we now know is that price made a 0.618 retracement just slightly above it, but we use that as a guideline. That was 42.31. It did that here last night. Did that between the around midnight, right in that time frame. As it did that, gave us a little bearish reversal signal here, coming into the 12:30 to 1 a.m. Session out there. That's not so important. But what we do know is that so I'm going to give you both the bullish side and the bearish side, because right now it's really a toss-up, because what was actually completed last night is a Gartley sell pattern. What do I mean, a Gartley sell pattern? A Gartley pattern out here requires you to have an A to B equals CD. If you use the low, that took place yesterday, that's going to be your A point, your B point. That took place at about between 2 and 2:30. Your C point, a little retracement down to the 3:30 to 4 time frame, and then out with IBM Apple's numbers at 4:30, and the market took off. The market went ahead, made a 1 to 1.272 A to B equals CD, right at that 0.618 retracement level. So that says, we'll go ahead and delete that pattern. We'll go ahead and delete both of them. That what could be, what did I do there? Okay, that's good. I'm going to get rid of, I'm going to try to get, oh man, I made a mistake there. Okay, let's see if I can go back and do this without having to reboot. There we go. Okay, so what the market could do, we're going to go back to that level. So here's the bearish case. The bearish case is what took place last night around that midnight time frame and that Gartley sell pattern. The worst case, we're going to take a look at the worst case scenario. The worst case scenario is that what that actually formed was an A to B equals CD to the downside. So if that's the case, if Apple is unable to get above and the key number for you to be watching today inside of the NQ is going to be 42.3450. That's really going to be your benchmark. That's going to be the level which is likely going to give us the most amount of information. If we see that level get breached, that's going to be the opposite of the pattern that we're going to take a look at right now. If we don't see that level getting breached out here, then more likely you're going to get a visit at least of the lows from yesterday, and a break of that area that would send price down to about the 4,091 area, 4,091 to maybe 4,052. That's the bad side. Now let's go take a look at the good side. What's the bullish side? What's the bullish case out here? The bullish case is that the market is actually ready to form its next A to B equals CD to the upside. It's already done one. Did that one right here coming off of yesterday's lows. We already gave you the A to B equals CD to the upside. It did that 1 to 1.272. Well, it's very possible, if we take a look at now retracements from yesterday's low, we're going to go from yesterday's low to the high that came in. What we're going to see is all that actually has been done, the damage here this morning, price pulled back into that 0.382 level. That's around the 41.99 area. So it's very possible that what's actually set up here is an A to B equals C to the upside. That's why I said, or I suggested, that the of this 42.34 level is going to be key. Because if we see that get taken out, what we are more likely looking at with regard to A to B equals CD patterns out here, let me get rid of the expansions, there we go, is something that looks like this. And I cannot tell you which pattern it is, because both are absolutely in play here as we speak right now. So it's very possible that what what the NQ would do is just like in the case of Microsoft yesterday, where Microsoft and a number of others certainly dragged the markets lower. And yeah, it really is the big cap stocks. I can prove that to you by just going take a look at the equal weighted ETFs versus the weighted ETFs. So we look at the Qs versus the QQEW as an example, or if we look at the SPY versus the RSP. But in any case, if that 42.34 gets taken out, you're looking at 42.92, maybe even 43.17 inside of the NQ. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're off to the races. We got the Dow up 57 points, trading out at 17,444. S&P up 11 at 2,040. Composite up 48 points at 47.92. You got the Russell 2000 up 5 points. Russell 2000 having a nice day yesterday. Goldilocks back $6. Silver down 7 pennies out here. Light sweet crude, she's off $1, trading out at 45.20. Lead the charge to the upside this morning. Biomed, ABMD is the ticker symbol, 33%. Maybe there's a buyout, or maybe they just simply cured a disease out there. I'm hoping it's the latter. They were out with numbers. That's all that their numbers go like this, 12.7 million. And wow, how about this? How about this for some growth out here for their third quarter? 12.7 million versus 4.4. That's a beautiful thing out there. That's the net income. That was the net income. 300% gain on net income. Revenues were up about 50%, 62 million versus 46 million from the prior year. So that's leading the charge, up 34%. I hope you own some of that stock. Illumina is illuminating the skies out here, illuminating the charts, up $9 and change, 4.5%. Apple up $7.50. We're certainly going to focus in on Apple today. Tupperware, that's up 10% this morning. That looks good. Western Digital Corp, that's at least having a dead cat bounce, up 5%, up $4 and change. Freescale Semiconductor up 21%. Nice move there. Boeing up about 3.5%. Electronic Arts out with numbers as well, up 9% this morning. To the downside, you got VMware down 5% off $4 and change. Ethan Allen Interiors, that's down 12%, down about $4. Open Text Corp, that's down $4, about 7%. Alibaba down 3% this morning. Radware down 12%, that's off $270. Netflix down $3. Mobileye down $1.37. Tesla off a couple of dollars. Baidu down a couple bucks as well. So let's go check in. What do we want to check in on first? So we took a look really at the indices. We took a look at the futures. So we'll kind of focus in on, we have things really set up. Let's go take a look at the stocks here that are moving. Let's start off by doing that. If we take a look at ABMD is the ticker symbol. This is the bio company that was out with big numbers out here. So this is at its all-time highs. Doing it with nice volume this morning, 555,000 shares. Now this had a real nice sign of strength back here on October 30th out there. This had wide price spread, 1.8 million shares. Went from a close the day before at 25.35, and it closed out at 31.35. Nice move there. Have another nice move. It's not a three-gap play out here, so it's not an exhaustion move. Does not look like it is exhausted. Let me put this back on a longer-term time frame. Well, I'll just put on a weekly time frame. Let's start off with that and see what we can see out here. Really not a lot. I mean, what a rocket ship this thing is. ABMD is the ticker symbol. If we take a look at, let's go take a look at Apple now. See what Apple is doing. Let's change this to a real short-term chart out here. Well, first let's leave this on the. Let's leave this. What the heck is that blue line? That's pretty wild. Let me see if I can delete that. There we go. No, I can't. How about that? What is that? What is that on my screen? Okay, now that whatever that was, that is gone now. So we take a look at Apple. This is a weekly chart. Apple right now is trading out at 116.38. Apple is trying to get into its weekly swing point high from November 24th. Now that had 181 million shares. You are traveling into it. It's only Wednesday. You've done 173 million shares already. November 24th, I believe that was the week of Thanksgiving, if I'm not mistaken. So therefore, that 181 million shares. That's really more for like 4 days worth of trading out here, 4.5 days, something like that. So if I just do 4 days, you like it about, add another, 40 times 4, about 50, make it 225, 230. You're still, Apple's moving into that swing point with volume. So if Apple does close inside 116.62, you're trading at 116.60 as we speak right now. It says it's going to go test those highs, 119.75. That's what the weekly chart is saying. Let's go take a look at the daily chart here for Apple, see what the swing point. So on the swing point here that we're dealing with, 119.75. Are we trading in there right now? That happens to be the trading session of November 25th. Now, 68 million shares. You've done 24 million shares here this morning. So the bottom of that is 117.45. So that becomes your line of demarcation out here, 117.45. Now, look, even if Apple doesn't, if it closes below that area today, as long as it doesn't get back all its gains and sell off and so forth, when you're coming into a swing point with volume, which Apple's clearly doing with 23 million shares, and it's just got 68 million shares on the daily basis, says it'll at least get back up and test that swing point. Chances are, though, it's going to go test that high, 119.75. We'll see how it trades. It's certainly got the volume in it as we speak right now. If I just put this on a 1-minute chart here, and then we'll just, we'll continue. I'm sure we'll continue to pay attention to it during the day out here. So on that 1-minute chart, here's the open. It started to sell off, but really with some light volume. So we had a little bit of profit taking, but with regard to volume, again, just a 1-minute chart out here, we're not seeing anything from a volume standpoint that says this thing wants to blow apart. So 117.45 is going to be the key number. That is on ticker symbol AAPL, but you already knew that. That's on Apple. Let's take a look at some other stocks here that are moving. Actually, what I'm going to do here is first go back and take a look at the summation index for the NASDAQ composite. So she's turned positive as well out here. As we speak right now, it's just above the zero line. It's trading out at 1.95. But when you get above the zero line, that puts the market in possession and in control of the bulls out here. So we'll see how this, but even yesterday, we saw a give back, and then inside the composite, you had Microsoft. That was impacting it. And so we had switched from the day earlier where it was in bullish formation back to bearish. Now today, at the moment, it is into the bullish side. Now, the reason why we're taking a look at this is because if the composite can close above, can get its price oscillator above the zero line, you'll have the composite in bullish mode. You'll have the New York Stock Exchange in bullish mode, which it has not been out of ever since the trading session of January 21st out here. So New York Stock Exchange, the wider swath. I'm always amused by the folks that use the New York Stock Exchange for one case to support one case, but then when the New York Stock Exchange is performing well, won't come back and use the New York Stock Exchange to do the other side. Let's just be consistent out here, as always. So if we want to understand what's going on with the wider swath of the market, what I can tell you is the New York Stock Exchange, yesterday's move in all has not given us any indication of a market that wants to crack, at least not with regard to the global equities out there. And weighted indices and so forth, yeah, most certainly. It's why, look, Microsoft's not in the Russell 2000. That's one of the reasons that the Russell 2000 was doing so well yesterday out here. If you take a look at, as an example, and you look at the equal weighted versus just the weighted, here's the S&P 500 as an example. If we just look at retracements here from the lows back here, and this is basic, this is on the close, these bars out here. But if you go from January 15th all the way up to and I'll just try. I don't know if I can expand. I don't think I can expand it too much out here. There we go. This is by the bottom chart here is the SPY, by the way. And you can take a look at its retracement. Now, if we do the same thing, take a look at the retracement yesterday. Again, from low to high, we'll take a look at now the equal weighted ETF out here, just to put things in perspective. So when we take a look at, I know that John Logan takes a look at market breadth in detail with his tools out there. There's another way to take a look at, just get a feel for what's going on market breadth wise, and if you take a look at an equal weighted look at the S&P 500, that's the RSP. I think there's one or two other equal weighted ETFs. This one happens to have enough volume that you could actually trade. RSP, that's the Guggenheim S&P 500 weighted ETF. You can see it didn't even make the 0.382 retracement yesterday. So it is those weighted stocks out here that are ones that are creating the most amount of problems out here. But if you look at like I say, if you take a look at what the, not what the generals are doing, but what the troops are doing, the troops here in the equal weighted ETF, they're not signaling any kind of problem. In fact, it's divergences. We don't really have a divergence here as of yet. If the equal weighted is able to take out its highs, get above the 79.87 level, and the weighted ETF, the spiders, is unable to do that, then we've got a divergence. And divergences between equal weighted and just the regular weighted ETFs out there, it's the equal weighted that actually paint the picture. We don't have that yet, nor do we have that inside of the QQEW. That happens to be the equal weighted ETF for the Qs out here. And if you do the same kind of thing out here, just take a look at retracements, go from low to high. We'll start off with the Qs. What you can see is that yesterday was an exact 0.618 retracement. Now, for those of you that use the 0.618 retracements, which you should, and we take a look at, we did that here on the 30-minute chart for the NQ to help us identify, hey, what's the level that we really ought to be focused on? And I gave you that price point that if the NQs take that out, it's an A to B equals CD to the up. The preponderance of evidence is an A to B equals CD up. And if it doesn't, then the preponderance of evidence says that the work to the downside is not over. I don't know which one it is that's going to, as I mentioned, I don't know which one it is that's going to, what outcome is going to take place today. I just know what we need to be looking for. Now, if you go look at the equal weighted structure here, the QQEW, and we go from, again, low to high, what you're going to see out here is yesterday was only a 0.382 retracement. So a substantial difference, between the weighted and the equal weighted ETFs out here. So we'll see. In the case of the QQEW, 4285, I believe, is its number. It's trading at 4255. It gets above that before the weighted counterpart does. pause, that would be another bullish sign out here. But the New York Stock Exchange, nah, no problem. Russell 2000, really to be expected because it doesn't have some of those weighted equities in there. Let's take a look at the VIX index, see what it's doing this morning. Trading at 1716. Yesterday closed right on the 50-day exponential moving average. This morning trading just below it, 1716. The actual 50-day is at 1722 out there. With as much damage as was done yesterday to the markets, to only close at the 50-day exponential moving average was more bullish than bearish, but we'll have to actually give it a coin toss. We're going to have to give that a neutral signal out here. Okay, so that's a little bit of the general-ish type overview of the markets and what's really going on underneath the covers. But let's go take a look at some things, actually, that are under the covers out here. Let's go take a look at some things that are moving to the downside. Let's take a look at the Open Text Corp. OTEX is the ticker symbol. That's off about 9% this morning. Looks like with some pretty good volume behind it. 353,000 shares so far. Taking on its most recent swing point from January 7th. That only has 300,000 shares. So it's breaking below that level. That level, by the way, is a price point of 54.39. You're at 54.21. Looks to me like this is going to get down and at least test, if not probably get into that high volume October 23rd swing point. That's only got 1.1 million shares. So if it closes inside of 53.80, it'll very likely run down to the $51 mark. That is Open Text Corp. OTEX is its ticker symbol. Netflix is off by about $7, $6 and change here this morning, down 1.46%. Really no big deal out here. We take a look at Netflix. It's had nothing. How about that? How about Netflix yesterday? Continuing to move higher. Volume behind the move, 3.5 million shares. Really not too bad, all things considered. This has already gone ahead and closed that window out here. That was the gap down with some big volume back on October 16th. It has fought that off. If we take a look and pull this back just a bit farther, where is it that Netflix is likely headed to? I'd have to say it's going to head back for the highs. Those highs being the September 9th time frame or date. 489.29 is the price range that Netflix looks like it wants to target. If we look at Pioneer Natural Resources, PXD is the ticker symbol. PXD is trading off about 2.5%, about 3% down, $4.55 out here on the daily chart here for this equity. Yesterday was actually up a bit as well, but this has got some not real trouble, but it's got some issues that it has to contend with, and that's that gap down that took place on November 28th. There were 3.3 million shares. That's it. 3.3 million shares. Yeah, 3.3 million shares to the downside. When I say that, so that was my mind was looking at something else out there. So far today, 148,000 shares out here. So Pioneer Natural Resources is kind of consolidating at the lows out here. If we look at, let me see, what percentage-wise, what do we have that's big? Radaware, let's go take a look at this before it falls off of our charts. RDWR is the ticker symbol. It's down about 11% this morning. They announced their results. Looks like revenues of 61 million versus 53, so not too shabby. Net income of 9.2 versus 5.7. Boy, that's pretty nice. But they must be a guidance issue out here. Now, this is actually just this morning here coming back to an area where it broke out. It didn't get, well, it actually got down to the top of where it broke out. That trading session inside of Radware, not Radaware, but Radware, that was the trading session, the breakout session, October 28th. Volume of 1.1 million shares there, the top of which was 1878, the bottom of 1805. Price broke down, our prices trading into that level, but with volume, 858,000 shares. But looks like whoever was buying then is buying now because this looks to be supported out here. Let me pull this back just a tad further. And give me more data on the left-hand side. So it looks like this thing was at all-time highs. This was back here on the trading session of January 20th. So with that gap down, maybe we're just dealing with what's setting up to be a bit of a consolidation pattern between the 18 level and maybe as high as $24. RDWR is the ticker symbol. Right now, the Dow's up 52, S&P is up 9, Composites up 45 points. Russell 2000 taking a breather today, up just a half a point. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Dow's up 67, S&P is up 11, Composites up 49 points. The Fed is going to release some minutes today. Looks like they do not have a press conference, not until March 18th. Thanks to Jay in the Tiger's Den for bringing me up to speed on that. So they've got a release of minutes sometime between 2 and 2:30 today out there. We'll just simply take a look at the markets, play the markets, use the information that's available to us, not worry too much about the Fed. So the things, if you're off to start your day today and you're just going to check in on the markets periodically, the level I think that you really want to be focused on and paying attention to, again, is going to be on the NQ. And if we take the NQ futures, NASDAQ futures, and again, we were looking at the 30-minute chart out here. It will be the same on 120, any type of chart out here. It's going to be that swing point that took place last night, and that's at 42.3450. Any move above that likely sets up a larger A to B equals CD to the upside. If it can't take that out, now it doesn't have to be today necessarily, so it doesn't have to be before 2 or 2:30 out there. But that's really the number. If it trades above that, you got an A to B equals CD to the upside. If it doesn't, then it sets up a revisit of the lows from yesterday. Those lows being inside the NQ down around 41, 42, and then maybe lower if it can take that out. An A to B equals CD to the downside. So both of those patterns are in play beautifully as we speak right now. So it's kind of a little bit of a neutral stance there, but that's where we'll be looking for a message. Again, from the overall market out here, New York Stock Exchange, it's in bullish mode out here. The composites floating right now back and forth between bullish and bearish. But here's the cool thing out here as well. I'd have to take a look at all the issues, but as I take a look at the Dow right now, whoops, didn't mean to do that. As I take a look at the Dow, this is what I did mean to do, is take a look at the price oscillator here for the Dow. It's trying to get back above the zero line, but I don't know if all the issues are all green as we speak. Right? Let me see if I can get that up here. So it may be at the max. Let me see. No, there's not. There are some issues in the red today as we speak in the Dow. Maybe about a dozen, 10 or so at least. Chevron, ExxonMobil, DuPont, Pfizer, Microsoft down 30 cents, JP Morgan, General Electric, and Procter & Gamble. Those are to the downside. So the interesting thing is if those flip to the positive side out here, we take a look at the summation index, very possible that it too would get above the zero line out there. But this chart here really doesn't have much in the way of meaning until the close, and so until the end of today's session. But you get all three of these in bullish formation, it would suggest not being short the marketplace out here. On the other hand, right now we've got two that are pointing down, the Dow, and the composite is underneath the zero line, and the New York Stock Exchange wider swath is not. Also, it's that VIX index. We're just trying to keep things simple here. 1722 is the number. You're at 1707 right now. You get above 1722, and that's where things can get a bit ugly inside of the markets. With regard to the currencies, we didn't really talk about the currencies here this morning, so we'll do that during the next show. We'll take a look at the euro, which looks like it's trying to form a bit of a bottom. We'll go take a look at the short-term charts out here. Right now, you got the euro. It did form a bullish reversal signal here yesterday with its close. So now what we'll do is when we do the next show, we'll take a look at the 10 or 30-minute charts and see if it's just making a retracement for its next A to B equals CD to the upside. So right now, the Dow is up 75 points. The S&P is up 11. Composites up 45. Russell 2000 is just a bit flat today, up about 60 cents. But I don't see anything changing too much on my screen out here. So if you're off to start your Wednesday, have a wonderful day. As always, thanks so much for joining us here at TFNN. We absolutely look forward to serving you. So have a great day, and I look forward to seeing you soon. Take care, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You're watching Tiger TV.